industrial real estate has probably done the best in the last couple of years. Residential has been very stable and commercial has tanked. You've heard about a lot of people moving to kind of cheaper parts of the US, probably like the South, Florida, whatnot. There was a boom there, but now some of the trends are reversing a little bit. A lot of the these commercial buildings are underwater because they can't refinance their debt. And then there's some situations where the commercial landlords are just handing back the keys to the buildings to the lender.
Hi, everyone. We have a very special guest today, a dear friend of mine, Michael Sin. Nick and I have known Mike for a while now. He is a licensed real estate broker in the city of New York. Mike is here to tell us a little bit about his background, not only as a real estate agent, but also as an investor.
Hi, everyone. So I'm Michael. I grew up in New York City, not in Manhattan, but in Queens. So I know the city very well, have seen the city transform and just go through many different iterations. I also went to high school here and I went to Columbia for my undergrad. Shortly after graduating, I actually worked in finance for a bit. So I was in investment banking, I worked in private equity, I worked in China strategy, and then also did my own startup before transitioning to real estate about 11 years ago. Got into real estate because growing up, my family always saying like, oh yeah, real estate is like the key to wealth, success. But then I didn't really understand how to do that. And I thought, getting in as an agent was the best kind of learning experience to get on the ground level. And then I liked it enough that I'm still doing it after 11 years.
It makes a lot of sense, especially as Asian Americans, there's a lot of emphasis on investing in real estate. But there's not a lot of information out there. And there's obviously different types of real estate assets that you can invest in. Can you just give us a quick overview about how you think about investing in real estate through different ways?
You can invest in real estate many different ways. So I think on the most tangible level, you said, okay, I could buy apartment, I could buy a house. And then if you have higher capital, you could buy a whole building. So let's break it down maybe a little bit. When you think about investing in real estate in terms of major asset classes, there are residential, commercial, and industrial. So residential is what you consider your typical, you buy an apartment, you buy a house. That I would say that would be squarely under residential. Commercial, it could be like an entire office building, or maybe just a retail space. Could be commercial, or a building that has offices on the top and residential on the bottom. That will still fall under commercial. And then there's a broad industrial use. So you think of warehouses, factories. So for a typical investor, you could buy the property and then rent it out in just the most simplest form. But as John mentioned before, you could buy into these publicly traded vehicles called REITs, which is publicly traded on the stock market where you could buy shares. Various fund managers will invest in various assets within their mandate. So if it's a residential REIT, then they're investing in various multifamilies across the US or across the world, depending on what type of REIT you're buying into. And some people like investing in REITs because it's very liquid. And then the REIT doesn't get taxed again because under the US tax code. And then there are similar types of REITs for commercial and industrial as well.
If you think about the past year or the past couple years, where have you thought investors have had interesting investments in different asset classes in real estate, or yourself?
I guess speaking about New York, industrial real estate has probably done the best in the last couple of years. Residential has been very stable and commercial has tanked. Just very broad overview. Industrial has done very well, especially for warehouse space, storage space, because of the rise of e-commerce, where the various players want to be closer to the consumer and want to ship faster. Amazon being one of the biggest players, or some overseas players saying that, they want to generate the goods in China, but then they need to ship it to a US factory, and then it disseminates through US just to compete with each other. I think that asset class has probably done the best. Commercial has done the worst because, with the pandemic, a lot of people shifting to remote work, so that a lot of companies have decided that maybe they don't need as much office space as they did. So there's there's a high vacancy, I'll say, across the US. So a lot of commercial real estate prices have fallen because of higher vacancy. And on top of that, interest rates has gone up. And so a lot of the these commercial buildings are underwater because they can't refinance their debt. And then there's some situations where the commercial landlords are just handing back the keys to the buildings to the lender. So it could be to a traditional bank like a Wells Fargo, or it might be a mezzanine lender. Residential, depending on, I'll say, where in the US, like some parts of the US have done better than others. During the pandemic, you've heard about a lot of people moving to kind of cheaper parts of the US, probably like the South, Florida, whatnot. There was a boom there, but now some of the trends are reversing a little bit, at least based on what I've read. Like, for instance, Florida real estate, the values are going back down because of insurance costs have really skyrocketed in the state because of hurricane risk, or in different parts of the country where because of climate change are having higher hailstorms that are damaging the roof, or the frequency of damage is happening much more often, that in order for the insurance carriers to make the math work, they have to increase the premiums for it to make sense, or they're actually pulling out the market altogether. For residential, you have to deal with a little bit more, like in terms of sometimes headaches. And also in various states or cities, there might be various tenant protections that they worry about. But why some people like residential is that fundamentally someone always needs a place to stay, like to live, right? Send to school, like raise a family, whatnot. But for commercial, which we've seen now in the current market, is that you might not always need to go to the office or work out of an office to run a business. So that's what's causing a lot of upheaval in the real estate market right now.
I'm not very familiar with industrial deals.
Yeah.
Do you mind explaining how someone like myself would even invest in those?
Let's say you see a warehouse that's currently being sold by like a broker, and you like, okay, it's like, I believe that I could rent this out for X amount, and then kind of like that is as simple as that. And usually industrial, similar to commercial, where the leases are longer. And then your ideal industrial client would be like, like the golden ticket is like, okay, you buy a piece of industrial land, and then you rent it out, lease it out to Amazon, right? That they got long-term lease, and then they saying that they could pay for all the utilities. A lot of commercial deals where some people like is that you could pass on certain amount of expenses to them, like part of the real estate taxes increase, or like how much it costs to maintain certain things, right? In general, let's say if an individual is just overall interested in the industrial sector, and you don't necessarily have the cash flow to like buy a piece of property yourself, you could look into like REITs that focus on the industrial space.
You brought up a really interesting point, which is we're in a different regime now, right, with higher interest rate environment, and now there's even debates about how long the high interest rates are going to sustain, whether it's a longer term phenomenon or whether cuts will even happen this year. I guess, how have you seen the real estate investment environment shift in response to interest rates? And do you have any advice for the audience into how to think about investing in real estate today?
I think there's fundamentally like different views on the interest rates that is going to dictate your decision. So some believe that, okay, interest rates are high now and it'll go lower later, and that they think that, okay, then they would rather buy now and then do a capital refi later, to take a mortgage later and buy all cash now. Real estate market generally follows the rule of, as interest rates go down, the prices go up. But something that's been interesting, at least in the residential market, is that as the interest rates went up, prices didn't really go down by that much in some of the parts of the country, where I would say New York is right now a more a buyer's market. Prices have gone down, but not enough to compensate the increase in rates. The US has a very interesting mortgage market that's very different from the rest of the world, in the sense that we offer 30-year fixed mortgages, which I don't think it's offered anywhere else in the world. Yeah. And because the vast majority of the US real estate market is government backed. So the government provides a lot of liquidity in the market, so they're able to provide a lot of advantageous terms. in general. So there's a lot of people that, let's say, they might want to move, but because they had such a great mortgage, such a low rate mortgage in the last couple of years, that they're like, okay, I'm not leaving. So there's been very little supply in the market, even though interest rates are high. One would expect that the price would be falling. It has fallen, but not by like what people were predicting. People were predicting a housing crash, which that hasn't happened.
For people who do rental properties as
Mm-hmm.
one of their primary investments, with prices staying where they are and cap rates potentially at 5%
Mm-hmm.
and mortgage rates at 7,
Yeah.
like how do you invest in real estate in this environment and make money?
I think you invest because your view is that the interest rates are going down over time, and that it's causing some price depression right now. Then you're like, okay, I'll buy now because I think later on the math will work out itself. But
Mm,
a lot of people actually don't have that view, so that's why I feel the market is actually a lot of people's on the sidelines right now because they feel like actually
mhm.
that like what you said, Nick, is that the math doesn't work currently. Um, or that they have a different risk view in the sense that fundamentally they say like, okay, real estate, what's interesting is that you could take whatever rental income that you generate, then you subtract, the various expenses, property tax, utilities, all the various fees, like repair costs, whatnot. But in addition, for tax purposes, you could take a depreciation uh, as an expense to kind of shield your income. Some people look at, okay, what is my return on an after tax basis? And then sometimes if they calculate that basis, given their bracket, does it make sense or doesn't make sense to them?
Mm.
Or sometimes they're like uh, long-term investors, they're not looking at the interest rate, sorry, like the cap rate, like at this precise moment, where like, okay, it's like compared to what it was historically, or like how does it fit in with my portfolio, like in terms of a kind of a risk adjusted like point of view. Because some people like see like how New York City real estate, they liken it to US treasuries, right? Because the risk profile is so much lower. And then how I always explain New York City real estate is that New York went through 9/11, great financial crisis, COVID, like epicenter, right? All the time it comes back. And in this history is that New York always comes back because people forget that US is like the most powerful like nation in the world, or most prosperous in terms of like GDP, highest GDP. And New York is the most populous and the highest GDP city of all of America. So there's a certain level of like to safety here, and then some people invest because they live in the apartment where it's part consumable good, part investment.
Yeah, I'm very envious of John who bought his New York place. And what year was it, John?
uh, yeah, it was. We locked in at a pretty low mortgage rate, so I don't think we'll be moving anytime soon.
Uh, have you by chance looked at assumable mortgages, Mike? At one point, John and I were chatting about this, and I'm curious as to whether it's an actual opportunity for investors, or is it like a small potential market?
For assumable mortgage, on some instances where let's say the seller had let's say a 2% mortgage, then the new buyer could inherit the terms at 2%.
Mhm.
Given this interest rate environment, that's extremely valuable.
Yeah.
But yeah, but it's a small slice of the market. Like there are assumable mortgages, but it's only if it's like I believe F FHA loan, which is like a certain specific type of like government loan. If you're lucky enough to find someone that has one and that it's a property that you're interested in, then yeah, it's totally possible. But then you do need to do some legwork to see like also if the bank that gave the original mortgage is willing to kind of transfer it over, because the bank actually earns very little in this kind of transfer. So sometimes you might not get people to focus on it.
I think you brought up some really interesting concepts. Nick and I explain the concept of bond prices, where when the interest rate goes up, the value of the bond typically goes down. Not a lot of people think this way, but conceptually, your mortgage is the same thing, right? When rates go up, the mortgage that you locked in, especially in the US, if it's a 30-year mortgage, the value of that liability is a lot lower. And if it's assumable, it could accrete value to you as an individual. Thank you, Mike, for hopping on our podcast. One last thing, Mike is a licensed real estate agent in New York, and I was fortunate enough to have Mike represent me when I was purchasing my apartment. And he's very well versed in the entire tri-state area. So if you're interested in purchasing real estate or investing in real estate, please let Mike know, and we'll have his contact information in the description of the video as well. Thank you, everyone, and have a great day.